Welcome everyone, and I wanted to let all of you know in a few minutes we will get started, and I will welcome everyone to the webinar, and we will get started in a few minutes. Thank you. Okay, well, we will get started, and I would like to welcome everyone. Good morning. My name is Glenn Fuji, and I am the project director for the MBDA CARES Act, and we're associated with the California Asian Chamber of Commerce. The Chamber has partnered with MBDA, the Minority Business Development Agency, CARES Act, Sacramento Business Center, and the Small Business Transportation Research Center, Southwest Region, to present this webinar today. So the Minority Business Development Agency is the only federal agency dedicated to the growth and global competitiveness of minority business enterprises. As part of the provisions under the CARES Act, MBDA has dedicated several centers to support businesses impacted by COVID-19. And today we have a special webinar, which I think is so valuable. The timing is right on, and we hope that all of you will get a lot of information and valuable information so that you can move forward. We're going to learn how to apply for PPP round 2 and learn about the rules and guidelines for all of you that you'll need to prepare your paperwork and hopefully help you with your application. At this time, I'd like to pass to Cassie to talk about our logistics.
Thank you, Glenn. I'll keep my introduction short. My name is Cassie Fortes. I'm the Program Development Officer for the Sacramento MBDA Export Center and here operating the back end of this webinar. Just to get started, this webinar will be recorded and shared with all participants. And you are muted upon entry, but if you have any questions throughout the presentation, feel free to leave them in the Q&A box located on your menu bar. And then if you have any technical questions or would like to chat with the panelists, you can leave that in the chat box as well. Thank you.
Thank you, Cassie. So today we're excited. We're partnering with Avaunt Limited today, founded by Mr. Perry Ghilarducci in 1985. Avaunt is a leading provider of tax, accounting, bookkeeping, financial planning, and consulting services to the region's business community. And I feel like today we're very fortunate to have both Perry, the founder, and his partner, Dorothea Silva, to share their expertise with us today around PPP. Both have done extensive research to bring information to you today. And we feel very confident that you will gain this valuable information and be able to apply it to your PPP round 2 coming up, which is live right now. So thank you for joining us today, and please enjoy the presentation, and I'm going to hand it over to both Perry and Dorothea. Thank you.
Hi, Perry. I believe you're muted.
Excuse me. Yep. Thank you. Good morning. I'm Perry Ghilarducci. This morning, we're going to be diving into PPP round 2. I felt it would be helpful as we advance to the first slide to just briefly lay out the history of the program. It originated in the CARES Act back in March, signed on March 25th, 2020. There was $350 billion allocated to the program. When that ran out, Congress went ahead and enhanced or expanded the program. That was late April. It added another $310 billion. We know that the program closed down round 1 on August 8th. And then there was money left over. I think it's in the neighborhood of 130 to 140 billion was left in the pot. And so we waited and waited and waited. And finally, on December 27th, at the end of this last year, we got a second stimulus program, which included PPP round 2 funding. They took some of the money from the original CARES Act, and now we have $284.5 billion sitting there waiting to be passed out. Well, how's that going to happen? There's really three ways that you can get into it. One is you didn't apply in the first place, so you would have a round 1 application. This is all flowing through the banks, just like it did in round 1. So you would contact a lender if you hadn't ever applied, and then get the process started there. We'll get into that in more detail shortly. The second group are folks that received a PPP loan in 2020, round 1, and they may not have received all the money that they were entitled to receive. Either there was a mistake made on the application. Later, we received guidance, as you know, dozens of interim final rules, or IFRs, were released by the Small Business Administration. They had very little time to activate this program, and they kept making changes, right? Very frustrating to businesses that were trying to apply and maybe didn't know that they didn't have all the information they needed to get the maximum amount of funding. Well, the CARES Act, the second stimulus act that was signed at the end of last year fixed some of that. So we'll talk about that. The third group is those of you that received first draw loans for the correct amounts and now are in a situation where in a moment we're going to talk about eligibility for round 2. Some of you have asked ahead of time about loan forgiveness. We're going to talk about that a little later. But it's been simplified for loans up to $150,000, still needing to meet the 60-40 cost allocation. At least 60% of the money that you receive from the PPP loan needs to be spent on payroll costs, and we'll define that. When can you apply? This is, when we put this slide together, we didn't have the date, but just this past Monday on the 11th, community financial institutions, or what they refer to as CFIs, opened the door to certain small businesses. That's a little more complicated and more than we want to get into now. In 2 days after that, or this past Wednesday, there were additional folks that were allowed in, and all other lenders are going to be after that. Again, Wednesday, it was still only CFIs. You probably know this if you got your loan through a bank, Wells Fargo, California Bank and Trust, whomever, US Bank, or some of the fintech companies, PayPal and Lendio and all these other folks. They have not started processing applications yet. Some banks are queuing you up, and so that's something you want to check with your individual lender. The last day to apply for and receive a loan is March 31st, but we don't know if the money will last that long. We think that fewer businesses will apply for round 2. We're going to talk about that when Dorothea speaks about eligibility, but there always is the chance that they could run out of money. and would they refill the bucket? It's up to Congress. So don't know the answer to that, but the idea would be to apply soon. Again, we don't know when the funds, how long the funds will last. There is an advantage to using the same lender, assuming they did a good job for you and you want to go back to that same lender as in PPP round one. And that has to do with submitting the application, but they already have your documents, all the documents that they need, assuming that the first amount was correct to the best of your knowledge. I would go back to the first lender and fill out the application with them because that ought to go more quickly. There's the form number if you want to Google SBA form 2483-SD. The lender is going to have an equivalent form, so you don't have to fill out that form. They will have it electronically submitted. But if you want to, I think it's a great idea to look at the form and be prepared to answer the with the information that's asked for, and there are certifications. So some of you asked ahead of time, are there separate certifications? No, they're actually on the application themselves. And so there are several questions that you need to answer in order to determine whether or not you would be eligible for this round two. So I think that's my part. If we advance the slide, let's see, is this you, Dorothea?
It is, yeah, thanks, Perry. So hi, everyone, Dorothea Silva here, and really excited to be sharing this information with you. So a lot of you are really curious about the PPP loan amount and whether or not you're eligible. So the calculation for round two is similar to the calculation as round one, with an increase to those of you that are in the food and accommodation industry. So if you have an NAICS code that starts with 72, you're allowed to take 3.5 times your average monthly payroll instead of 2.5 times. If you recall, in round one, you took 2.5 times your average monthly payroll that was recorded in 2019 as your loan amount. Let's see. There is also important to note that new payroll cost calculation for farmers and ranchers. So if you're a farmer or a rancher, you'll want to look up what those are. There's a new calculation for you. And then also the elimination of the provision for refinancing the EIDL. So if any of you received a round one loan and already submitted your application for forgiveness and received an EIDL grant, you had to back out that EIDL grant from your forgiveness calculation. Well, that's been corrected. And so that is no longer a requirement on the loan forgiveness application. Let's go ahead and advance the slide, please. Okay, so who is eligible? So the eligibility requirements for round two are narrower than they were for round one. In addition, there are PPP funds that are earmarked specifically for nonprofits and news outlets that weren't eligible during the first round. So for round two, you have to have no more than 300 employees, which is down from 500 in the first round. If any of you on this call have, that a large amount of employees. So under 300 employees. And then you have to meet the, of course, the applicable SBA revenue size standards and affiliation rules. And those are the same as they were from the first round. Advance the slide, please. This is, so what are some of the other strict requirements? So to be eligible for round two PPP, if you received a PPP round one loan, you have to demonstrate at least a 25% reduction in gross revenues between comparison quarters in 2019 and 2020. So what does that look like? Up on the slide here, you could take any one quarter in 2020 and you look at your gross revenues number. So on this slide, you know, we have it called income, it's gross revenues. And you look at, you take one quarter, in this particular example, we have the first quarter of 2020, and we're comparing it to that same quarter in 2019. And we're looking to see whether or not there was a drop in or decline in revenue of greater than 25%. And if there is, then you are eligible to apply for round 2. Now, if the business was in operation in all 4 quarters of 2019, and you can take like an overall drop. So if you wanted to look at all of your 2020, compare it to 2019, and if you at that level see a 25% drop, then you are eligible as well. Next slide, please. Actually, let's just go back to the previous slide. I just want to make note, because we have had a number of questions asked of us as to whether or not, if I look at my bottom line, which is my net income number, because my expenses have increased throughout the year for 2020 because of COVID-related expenses, can I take my net income number? So net income is after is your revenue minus your expenses gives you your net income. Can I look at that number and see an overall decline of 25%? No, that does not. That is not in the rules. You have to start at your gross gross revenue number. The application says gross receipts. So they will. We're not sure exactly what they're going to ask for, but they'll probably ask for bank statements, some sort of statement of revenue to show the decrease. All right. So let's advance the slide. Okay, so a second draw PPP loan may only be made to a borrower that has, they have to have received that first draw PPP loan. So if you haven't received a PPP loan from round 1, you would go back, as Perry said earlier, and apply for round 1 first. So second draw is available if you've already received PPP round 1, and you have used or will use the full amount of your first draw PPP loan on or before the expected date on which the second draw PPP loan is dispersed. You can't be in bankruptcy. If you're in bankruptcy, you're not going to be eligible. You'll also, ineligible entities also include a person or an entity that received a grant for shuttered venue operators under Section 234 of the Economic Aid Act, and an entity that has permanently closed. So if you're permanently shut down, you're not eligible for round 2. Next slide, please. All right, Perry, you're up.
I'm trying to answer questions in the chat. Sorry, guys, I'm trying to get to you. If we can't somehow get to your questions before the end of the webinar, we will, those questions will be saved, and then we will get a hold of you afterwards. We'll get you an email with your questions answered. So here we are on loan forgiveness. So this is a really in-depth piece of the whole program. This is why we're doing it, right? To be forgiven. We don't want to end up with a loan. And so there are rules from the first round that were carried over. We want to focus on some of the new guidance. We still have the 60-40 rule, which is to say that you need to spend at least 60% of the loan proceeds on payroll costs. Then when you get to forgiveness, I listed 2 additional categories beyond the original: payroll costs, mortgage payments, qualified interest, rent and utilities, or qualified mortgage interest. Sorry, that's a little awkward. but we added 4 categories. 2 of them are listed there: supplier costs and worker protection expenditures. So in that 40%, or in the non-payroll cost area, we have these new categories. So what are supplier costs? Those are any goods that you've ordered, orders that you've made prior to receiving the loan that are so-called essential to operations, right? We need more guidance. What is that? What are those essential costs? Worker protection expenditures, that's spelled out. That's pretty clear. PPE, or personal protective equipment. And actually, in addition to that, property improvements. You may have had to make improvements to your space to become COVID compliant. This goes all the way back to March of 2020. So if you had to put up shields, modify your space in any way, make improvements to the property, that's what they're talking about there. The other 2 that I failed to list were property damage costs. Unfortunately, some businesses were damaged due to, public disturbances, which is a nice way of saying looting and rioting during 2020, not even COVID related. That's part of it, but it has to be not covered by insurance, right? So if you had a loss that was not insured from property damage, that could be part of your non-payroll costs. And then finally, operations expenditures. This is detailed out in the regulations, or the IFR, as software, cloud computing, and other HR and accounting needs, right? Like Avaunt, right? You needed to hire someone to help you navigate this whole COVID relief rules. So we had an HR person in our firm create a remote worker policy. So I would say that would qualify as a non-payroll cost, something you didn't have before. So those are qualified expenses. We do have the loan covered period. It can be anywhere between 8 weeks and 24 weeks. So you don't have to wait till the end of the 24 weeks. If you've spent the money and want to apply for forgiveness, you can do it then. That is the time period that you have to spend on forgivable costs. So that starts when you receive the disbursement, when that money hits your bank account, when those loan funds hit, the clock starts running. Now, if you did round 1, you understand with payroll, there is a covered period and an alternative payroll covered period. We don't have time to get into that, but suffice it to say that it's payroll that will probably use the whole amount, right? If you have 24 weeks to spend it, you may not ever need to get into your non-payroll costs. A big change in the law, or in the new Stimulus Act, was that idle loan advances no longer need to be subtracted from PPP loan forgiveness. Those of you that were early birds and filed for forgiveness, you'll note that on the original forgiveness application, we don't have a new one yet, by the way, they've promised that. But if you filed an original application and you had to subtract your 1,000 or 1,000 per employee up to 10,000 from your PPP loan forgiveness, they're going to have to come up with a procedure for you to get that money forgiven as well, because right now they consider that a loan, the portion that was related to the advance from an unrelated program, right, for the economic injury disaster loan. No longer, you do not have to subtract that from your PPP loan forgiveness. So contact your lender if they pick up the phone. This may take a while to get that straightened out if you've already filed for forgiveness. There are reduced record retention requirements, and that just simply means that the records that you use to apply for the loan and to be forgiven of the loan, even if you don't have to turn them into the lender, you're going to need to save them for a period of time. And there's some different time periods for payroll versus non-payroll records that go into the loan calculation and into the loan forgiveness. So we won't go into detail there, but just suffice it to say you need documentation. Even if you don't have to turn it in, your lender and or the SBA could request that at a later date. And then here's an important point when you're applying. If your loan amount is less than $150,000, what Dorothea talked about earlier about documenting your revenue reduction, that does not have to be uploaded at the time you apply. It could be, you can get it out of the way to give them the information, which would be potentially a profit and loss statement. Or at the time, if you have your tax return finished from 2020 and you're using the rule that you're 25% or more down for the whole year, you might be able to use, for example, your 2019 Schedule C and your 2020 Schedule C to show that you had the revenue reduction that Dorothea explained earlier, or an 1120S for both years, or the 1065, any of those forms that your business files. But by the time you apply for loan forgiveness, you have to have that documentation. So if I've had calls from clients that want to finesse this, they really aren't down 25%, but don't do it. Don't apply if you know that you're not going to qualify for the revenue reduction piece, because then you'll have to return all of the money. You won't get a loan, because that's what they thought. The clients that were asking is, well, I'll just have a loan. I said, no, you're not eligible. So be careful there with documenting your revenue reduction. If you don't have a computer program like QuickBooks or another accounting software, you'll be forced to use bank statements to demonstrate that revenue reduction. So more details again in the IFRs. If you could advance, Cassie, to the next slide.
All right, this is my slide. So what are the PPP tax consequences? We have been waiting for this, those of us in the accounting world, but then also small business owners have been really anxiously wanting to know, will my loan be taxable, right? Well, in the new act that was signed into law in December, we're so excited to tell you and happy for our clients that PPP funded qualified expenses are now deductible, and you don't have to worry about your PPP loan being taxable. It's not taxable income. It's actually treated as tax exempt income. The loan forgiveness, this is for any of you accounting geeks out there, the loan forgiveness increases the tax bases in an S-Corp stock and partnership interest. No need for you to worry about that. Whoever does your taxes should understand what the impact is. But what you need to know is that your PPP loan is not taxable income, and the expenses that you use to pay for with those with that loan amount are deductible on your tax return. Next slide.
Back to me. Again, I was typing an answer to the question. Here we go. So these are things that we don't have time to discuss in full. We alluded a moment ago to this Shuttered Live Venue Operator Grant, brand new program will be administered by the SBA. If you have clients that qualify for that, if your accountant's on the line, or if your business happens to fall into the definition of what that is, you can find that. It just got uploaded this morning to the explanation of the program, got uploaded to sba.gov. And at the top of the page, there's a COVID bar. If you click on that, you can navigate to this, this particular grant. Some of you will have heard about it. It was referred to back in the summer of 2020 as Save Our Stages. I am super excited about this. It's a huge program. It's 45% of 2019 gross revenue, a big number. So there's $15 billion that's been set aside for that, recognizing that these are, museums, venues, independent movie theaters, again, small businesses. There's qualifications on the SBA site. The second one is just, again, to spend a minute on the EIDL program. They're targeted grants. So some of you may qualify for the full $10,000. You'll know what I'm talking about. If you got something less than 10,000, that's the free money. That's the grant that doesn't have to be paid back or used for, specific expenses. But let's say you have a small business and you're a sole proprietor and you have no employees. You're one, right? So if you applied for that, you qualified for $1,000. The SBA limited it to $1,000. So we have money now in a pot set aside for businesses in certain low-income communities that have suffered a revenue reduction. They could get the rest of the money. They could get another $9,000 or whatever was less than 10,000 on the first round. We don't think that applies to the rest of us who don't meet the qualifications for the targeted grant, brand new section in the bill that talks about that. But you're potentially able to apply. Not yet, it's not available on the SBA website, but maybe by January 17th, by this Sunday. So keep an eye on that. If you missed the first round, let's say you applied and they ran out of money, we understand you don't have to apply again. But if you've never applied or you never even heard of it or you don't know what I'm talking about, it's free money for your business to apply for to, again, help you with COVID, get through the pandemic. Employee retention credits have been expanded and extended into the second quarter of 2021. This is huge because businesses that were originally faced with a decision of whether to use the credit, this would be something that your accountant would know, use the credit or apply for the PPP. You couldn't do both. Now you can have, once you've spent the PPP money, you can have the tax credits, and that can go in to the first 2 quarters of 2021. Big credits, potentially $5,000 per employee. So you got to look into that. That's a good one. Just a whole lot of other things to list there. You have a small business, you know that you're limited to 50% of meals normally, but for the next 2 years, you get 100%. The only catch is in the rules, it says that it has to be provided by a restaurant. We don't know exactly what that means, but presumably, food trucks and others, that caterers, if you take the food out, again, the food has to be provided by a restaurant. We've got expanded FFCRA benefits. There's an individual provision for an above the line deduction for charity for those that don't itemize in 2021. Corporations are usually limited to 10% of their income for charitable purposes. That's been raised to 25%. Let's see. And contributions of food inventory. So our restaurants on the call would want to look into that. There's some deductions available to you. We know about the stimulus checks. That's to individuals and their qualifying children under 17. Some of you might have FSAs or flexible spending accounts. That's section 125. You'll know it as a cafeteria plan maybe. If you have money left in that account that's unspent, usually it's use it or lose it, right? But we have some relief over the next 2 years, being able to carry over unused balances in our 125 plan. Your trustee should know about that. So if you couldn't get to the dentist or whatever, use those medical monies, you're going to get rollovers, which is pretty cool. The last thing I would highlight is tomorrow is the last day. If you don't know about the California Main Street small business hiring credit. That's a California credit that is up to $1,000 per employee. So there's a reference period, again, just like your PPP, before and after calculation of your headcount, your numbers of employees, and a $1,000 credit if you increased by November the 30th. So take a look at that. You have a short time frame to look into that if you didn't know about that. So now I think we'll just deal with questions, right? So Dorothea, you've got a couple of questions that you want to answer live.
Oh, yeah, I accidentally pressed the wrong button, but okay.
Oh.
I do have one question that I have not answered that I'd like to answer live. So I got the EIDL, I got the $10,000 EIDL grant plus a $150,000 EIDL. The loan does not get forgiven, correct? So the $150,000 EIDL loan is a loan separate from your PPP. It does not affect your PPP. It doesn't affect whether or not you can apply for a round 2 PPP. Now the $10,000 grant that you've received, that is a forgivable grant. So that does not need to be paid back. It does not affect your PPP forgiveness amount.
Right. Okay. So there's a question online that says, for comparison purposes, what if we have not yet filed our 2020 corporate taxes? This is in relation to the comparison between 2019 and 2020 taxes. That's a very, very good question. We believe that the best thing you can do if you have software, say QuickBooks, you could use bank statements, but you could run a quarter to quarter report, a profit and loss statement focused on revenue, and add the percentage variance to that and see if that number is 25% or more. And you can find out if you qualify for PPP round 2. Another individual has asked if a $400,000 round 2 loan is funded and $150,000 of that money is used to pay off a previous idle loan, and the remaining $250,000 is used to comply with the 60/40 requirement. That's a pretty specific question, but we understand that you cannot refinance idle loans into your PPP unless the loan was made between January 30th of 2020 and April 3rd of 2020. So if by chance you were really early in the process, got your loan by April the 3rd, which I don't think honestly many people did, then it refinances into your round 1 loan, but it doesn't get forgiven, right? So you do have to use PPP loan money for eligible costs, payroll costs, non-payroll costs, not to pay off debt. So we have someone, again, it's a quarter to quarter comparison to do the 25% decrease. If you decrease, let's say in the first or second quarter, but overall for the year, you're down by less than 25% gross revenue, you're fine. You just need to show 1 quarter has had that decrease. What else?
We have a question about whether or not, did we say that, when can we apply for PPP round 2? You don't have, all that you have to do is, if you're eligible to apply for round 2, you just have to be able to say that you have spent all of the money that you've received from round 1 prior to applying for round 2. So you don't have to wait until the end, later in January. It's just a matter of, finding the bank or your lender that is ready to accept the application.
Mm-hmm. Yeah, that's right. We think that you should use this time to gather documents, though. you know, your payroll processor records, your payroll tax filings, payroll tax forms, you know, all your quarterly returns and your annual 940 and W-3, especially easier if you have a processor like an ADP, you can download that. If you're self-employed and you don't have employees, you probably will have your 1099 and or your Schedule C from your sole proprietorship. But you also need to maximize your payroll costs. You'll need evidence of your retirement and employee group health, life, disability, vision, and dental insurance. Those are new ads. The life, disability, vision, and dental was added to the health insurance. So again, beware of that. Get a hold of that information so that you can maximize your loan proceeds. And you also need a payroll statement or something similar, maybe a payroll journal that will show that you were in business as of February 15th, 2020 to establish that the business was operating. Again, if you go back to your same lender, they already know that. This would just be for new applications. Yeah. The form for, go ahead. Go ahead.
Well, I was going to answer this question. Will the employee calculation be based off the same time frame as the first? If we saw a reduction in headcount after the initial PPP loan ran out, will we go based off that? So I'm going to make some assumptions here in answering this question. I'm assuming the question is driven off whether or not they can apply for round 2 and what that dollar amount will be for round 2. So in the round 2 application, it does say that you can use the same average monthly payroll in 2019, looking back at 2019 and use those amounts paid in 2019. Or if you paid less payroll in 2020, you're able to look back in the 12 months prior to applying for round 2. So if you're applying in January, the 12 months prior would be, you know, January through December of 2020. You can use that payroll, those payroll amounts, and the average monthly payroll you paid in 2020 to calculate your loan amount. I'm thinking that was the direction of the question. If I didn't answer it, please, you know, type a follow-up.
Yeah, and I think I would add to that we're waiting for guidance on the specific part of that question that would deal with loan forgiveness and the payroll covered period and the headcount reduction. So if we have a headcount reduction, is it the same measurement as in round 1, which is there were a couple of measurement periods before the pandemic, and then there were the headcounts after the pandemic, which would be up until, I would suppose, the end of 2021. So you're going to have to wait for guidance on that headcount reduction. I would expect more of the same sort of formula, but with different dates. So we just don't have that yet. Yeah, so we don't have the form for forgiveness yet for round 2. And because the loan forgiveness was modified with the recent Stimulus Act, we banks have pulled, most of them have pulled their forgiveness for the time being until they can update for the new guidance. So loans under 150,000 should not have to submit any paperwork other than a 1-page application. That's not live, to my knowledge, on any of the bank sites yet, but we do have, we do know that that's going to be much easier. And so hang out and wait. You've got 10 months from the end of your covered period to apply for loan forgiveness. Your banks are going to want it off their books, so they're going to be hassling you with emails, apply, apply, apply. But don't worry about it. You've got plenty of time. Let them sort out the new rules, and that will help you get as much forgiveness, hopefully full forgiveness. You know, the start and end date for the 24-week covered period, again, it starts when the loan money hits your bank account. So it's a very specific period of time. What else? We're still under reduced capacity. Here's a restaurant owner, and now we qualify for a larger loan. How are we to meet the 60% payroll requirement for forgiveness? Well, you do have 24 weeks. They're going to give you 3.5 months worth of payroll. Dorothea talked about that earlier. You have a 3.5 times average 2019 monthly comp. So you'll have essentially almost 6 months to spend 3.5 months worth of loan. So hopefully by the time you're able to get your loan, you'll be able to hire people back. And by the end of the 6 months, so let's say that could be into July or into June, you'll have hopefully enough time to get to that 60% threshold, or there might be a loan at the end of the process for you, which wouldn't be bad. I mean, it's better to have something than nothing. I hope that helps.
One of the questions is double dipping still excluded as qualified expenses. If I have payroll costs billed to government contracts and restricted foundation grants, I cannot count these costs as qualified expenses. And so yes, double dipping is excluded. You'd likely have specific provisions in your government grants or contracts that would disallow those expenses to be used for these PPP expenses.
Right. There's an anonymous attendee, don't know the name. Can you apply for a second round separately? Let's say there's a business that there's a parent, so you applied for the first one using the parent's tax ID, but the subs have different tax IDs. If, is the loan to all of them, or can it be separate loans to individual businesses? You have to check the affiliation rules, but there's going to be issues with that because the commonly owned businesses are going to be limited to the overall loan maximum, which is $2 million. And then there's, of course, the head count, the employee counts that Dorothea referred to, the 500 or less employees under the first round, 300 or less under the second round. Restaurants are kind of unusual because those that have multiple locations get to count those head counts per location. So just get into the details of the IFRs and maybe have an advisor or your bank help you with that. Yeah, Bank of America is still one of the lenders. So far as I know, all of the banks are going to play. If they participated in round one, they're going to participate in round two. So Bank of America, I do know that California Bank and Trust, I mentioned that earlier, they are taking applications from people that are not their customers. I would say virtually all of the banks require a banking relationship with them before you can apply through them. But California Bank and Trust is opening that to new customers. So you might check them if you weren't happy with the first round or your own bank. You might look at CB&T.
What about this question, Perry? Schedule C lost in 2019, but net income from rentals with no employees, 0 employees. So you would not be eligible for PPP.
That's right. Yeah, rentals are not considered. If the rental activity ends up on a Schedule C, if it's your trader business and there's net income, yes, you can apply. But assuming you meet all the other qualifications. Really, really sad to see California dragging their feet. One of the participants wants to know, what about California? Sad news there is that we do not get to deduct the expenses that were forgiven on our California returns. Go figure, right? So we've been focused on federal law throughout this entire webinar, but California has not conformed to the to the federal forgiveness rules. So they're sticking by the idea that those expenses are not deductible that are paid with forgiven loan funds. So you will have a California adjustment unless our legislature shows some empathy and changes the California state law to make it not taxable like the feds. So that's unfortunate. Let's see, we still have a little more time.
That's right.
We're going to get to all your questions offline. We'll answer as many as we can live. How can we verify if the correct amount was provided in the first round of the PPP? You'll need some help with that. Unless you have, if you don't have a CPA, you'll probably want to get all of the records that are required and have your lender help you with that. They're supposed to work at their very best to get you the maximum amount possible. So if you filled it out with sort of estimates, try to get the actual documentation and work with your lender or contact a CPA. Not any CPA, preferably your own, but someone who's studied this and knows what they're looking at. Applying for the EIDL grant, like I said, check out the sba.gov site on Sunday, the 17th. Hopefully people will not be looking at their email or looking at their website on the weekend or even on the holiday on Monday, and you might be able to get in there without crashing the system, unfortunately. Yeah. There are yet no programs beyond PPP round 2. So if you don't have that 25% reduction, I'm not saying there never will be. The incoming President-elect Biden has pledged to have more stimulus. So while most accountants are reeling from round 2, stay tuned. There could be a round 3. We just don't know. Other options available. I would go to the SBA website. All the coronavirus financial programs are listed there. PPP, EIDL, all of the regular SBA programs are still intact. There are bridge loans and other 504 loans and 7A loans, working capital loans for small business. Maybe tougher to qualify now considering the state of many of our small businesses, but I wouldn't give up. I would check SBA.gov. Churches are in, right? There's a question about churches. We applied to the SBA and have yet to receive anything. So you're going to have, if you've had problems in round 1, you're going to have to resolve them first because your bank will not be able to get an ID number for the loan for round 2 from the SBA unless that first round is cleaned up. So work with your lender or a CPA and see if you can't fix whatever went wrong while you were denied in the first round if you're a church, because you're certainly entitled to PPP round 1 or round 2.
Yeah. One thing I'm learning, there's so many good questions, and from seeing all of these, it's very apparent that PPP it's not clear, right? There were so many changes. When it was first initially put out for businesses, and then changes kept coming, as 2020 unfolded. And I'm sure we're going to see that here as well again in 2021. Changes and modifications, particularly when the new president takes office. So we just, we urge you to use, to seek out, as Perry said, your CPA or your advisor to help guide you through this process.
Yeah. One more, PPP applications are live on lendio.com. Someone has asked, are there any lenders that are open? So again, check with your lender if you have a round one loan. But if not, there's nothing to prevent you from applying with a different provider. Just know that you'll have to provide all the documentation again, right? Because they don't know your situation just yet. So check Lendio, but just keep an eye open for ideally with your own bank, right? If your business just started in July of 2019, how you can compare gross revenue? A great question. There are guidelines in the IFR. We don't have the time to get into answering that fully, but you can use different periods to demonstrate the revenue reduction, even if you started mid 2019. As long as your business was in place by Feb 15 of 2020, there are ways to get in on the revenue reduction. Glenn, how are we doing on time? Trying to get as many questions as we can. Yeah, I mean,
you know, Perry, I appreciate it. We have a lot of unanswered questions in the chat and in Q&A. I think in due respect to all the participants' time, that Gilbert Lara, one of our colleagues, will be putting his email address in chat to inform all of you that you know, if you have any additional questions that you were not able to ask today, that you're welcome to submit that to his email. For all the questions that currently exist that we did not unfortunately get to today, we will be responding to you, and it'll be via email. And please continue to submit your questions again to Gil, who will be putting his email address in the chat box so that we can field questions down the road. And at this time, I just really want to extend my thank yous to both Perry and Dorothea. I know this is a time where there's a lot of anxious businesses here. And again, we want to let everyone know that we're here to try to support you the best that we can, to try to ease your anxiety and your hurdles and challenges as you apply for the PPP. And as Dorothea outlined, it's going to be an ever-changing world day by day. In fact, before the webinar started today, Perry had informed us of 2 changes that came through this morning. So I think that's just going to be how it will be moving forward, and especially with forgiveness as well. So stay tuned. We'll try to possibly have a Q&A session that's attached to this. We'll keep all of you informed. And I want to see if Perry or Dorothea have any closing remarks.
yeah, what can I say? I mean, we've waited a long time for this, understanding that this time should be better. The government has learned a lot about how difficult it can be just to launch a program like this, but this is, we've seen this movie before, so hopefully they're quicker, more agile, more helpful, the second time around. So I know it's their desire, it's their goal, along with the banks, to help us. And so don't lose heart. Hopefully, in the process of waiting for round 2, we know that some businesses didn't make it. So if you're still there, we empathize with you, and we wish you the best.
Yeah, absolutely. PPP is a great program. It's designed to help the businesses keep their employees employed. So we want to help as many of our clients and businesses get access to the funds.
Absolutely.
Thank you so much, Perry, Dorothea, for your time and your expertise today. We really, truly appreciate it. And again, I want to announce that the video that you see today it's been recorded and will be sent along with the PowerPoint presentation, so that everyone will be receiving that Anyone who registered, of course, will receive it as well. And don't let that stop you from asking questions. Again, for those of you who were not able to get your questions answered, we will follow up with the answers the best that we can as soon as possible. And please stay tuned to all the information coming through in regards to PPP round 2, including the approved lender list. I want to emphasize what Perry said, that please inquire to your PPP round 1 lender to see if they are participating, because I think I agree that would be the most efficient way. And we will try to publicize a list of PPP approved vendors as we get them. And I think there is a link on the SBA website right now that you can
Right.
look at. So anyway, I just want to thank all of you again for today. We really appreciate you supporting the webinar, and we wish you nothing but the best. And we're committed to try to help you in any way we can. So thank you again, and have a great start of 2021, because we all feel it's going to be a lot better year. So thank you again. Take care.
Thank you. Bye.
Thank you. I know.
Bye-bye.